All right, welcome to Talk Tickers. We're here to cut through the noise and get straight to the core of what's happening with the companies you follow.
That's the plan.
Today, we are taking a deep dive into the first quarter 2025 earnings call from Argenx.
A really interesting one this quarter.
Our mission, well, it's to unpack the key financial results, understand what's driving their commercial side, check in on pipeline progress.
And really get a feel for management's outlook, in this pretty dynamic market.
Exactly. It's all about getting to those essential insights.
Yeah, earnings calls, they're more than just the numbers, right? They kind of paint a picture of the strategy and how well they're executing.
Mm-hmm.
And this quarter for Argenx, it gives us some pretty clear signals on how their key launches are maturing and maybe what that next wave of growth could look like.
Okay, so let's start with the headlines then. The big numbers for Q1 2025. What was the top line story?
So the big number was product net sales, came in at $790 million.
$790 million.
Yeah.
Okay.
Yeah, and that was really the main driver for their total operating income of $87 million for the quarter. There was also about $790 million in other operating income alongside that.
And that's $790 million in product sales. I mean, that's a massive jump from a year ago, isn't it?
Oh, significant doesn't quite capture it. It's a 99% increase compared to Q1 2024.
Wow, 99%.
Yeah, it really highlights just how rapid the uptake has been for their lead product over the past year, as those global launches really gain traction.
Okay, that's year over year, huge growth. How did they do just compared to the last quarter, Q4 2024?
Quarter over quarter, product net sales grew a solid 7%.
7%. Okay.
Yeah, and digging into that a bit, the U.S. market, which is their largest, that grew 5% quarter over quarter.
5% QOQ in the U.S. seems, well, a little slower than the overall 7%. What was going on there? What influenced that in Q1?
Yeah, that's a good question because, management stressed the underlying patient trends remain strong. They pointed to a couple of specific things impacting U.S. net sales growth this quarter.
Okay. First, you've got your typical Q1 seasonality. Things like benefit reverification for patients as the calendar year resets. That's pretty common in pharma.
Right, the annual insurance dance, we see that a lot. What else was at play?
The more significant factor this quarter, and this one's more structural, was the Medicare redesign that took effect January 1st.
Ah, right, the Medicare changes. How did that specifically hit net sales in Q1?
Well, what happened is the redesign basically accelerated the channel mix evolution for some patients. Specifically, it pushed more of them into Medicare Part D.
Okay.
And when patients move from Part B to Part D, especially into that catastrophic phase of Part D coverage, it directly impacts the gross to net calculation for the quarter.
How so?
Basically, the company has to pay higher rebates in Part D, so that reduces the net revenue they actually receive per patient compared to what they'd get under Part B. So, okay, let me see if I follow. Demand was still strong, patients were coming on board, but this regulatory shift meant, for some patients, they collected less net revenue because of higher Part D rebates. And that put a bit of pressure on the headline U.S. growth percentage for the quarter.
You got it. Precisely. It's a nuance in how the revenue gets recognized, and it reflects that changing payer landscape, which the reform just accelerated. And it's something they expect will continue to influence that gross to net calculation, especially as more patients transition to Part D, and particularly with these self-administered options becoming available, like the PFS.
We'll definitely come back to the PFS.
Right.
But outside the U.S., you said things were really humming.
They were, yeah. Japan and the rest of world segments, they saw quarter over quarter growth in the high teens.
High teens, wow.
Yeah, these markets are generally a bit earlier in their launch cycles, and they're benefiting from new pricing and reimbursement agreements kicking in.
Makes sense. Okay, shifting gears to the cost side, cost of sales, gross margin. How did that look?
Cost of sales was $81 million. That resulted in a really robust 90% gross margin.
90%. Still very strong.
Yeah, and that's right in line with prior quarters, so it indicates the manufacturing and supply chain efficiency is holding steady.
Good sign. And operating expenses. UpEx.
Total operating expenses came in at $668 million for the quarter. That was actually a pretty modest 2% increase compared to Q4.
Only 2% up Q1Q. What drove that?
Well, the increase was mainly driven by a $12 million bump in R&D investment.
Okay, investing in the future.
Exactly. And that was partially offset by a $10 million decrease in SG&A expenses, sales, general, and admin.
Interesting. So heavier investment in the pipeline this quarter, while maybe sales and marketing spend pulled back just a bit.
That seems to be the sort of tactical adjustment for this specific quarter. It all led to an operating profit of $139 million.
$139 million operating profit.
Yeah, and they also had a nice tailwind from net financial income. That was $36 million. And it included $27 million in unrealized exchange gains on their non-U.S. cash balances.
Ugh. Currency working in their favor there. What about the tax rate?
The effective tax rate for Q1 was 16%.
16%.
Bringing the profit after tax, the bottom line, to $169 million.
Solid bottom line for Q1. Okay, looking at the balance sheet then, how is the cash position looking?
Very strong. They ended the quarter with $3.6 billion in cash, cash equivalents, and current financial assets.
$3.6 billion. And where did that cash build come from? Was it financing or?
No, primarily, and this is important, it came from cash flow generated by their operations.
Great. So the commercial business is throwing off significant cash.
Exactly. And management also made a point to reiterate that their previously issued guidance for total R&D and SG&A spend for the full year remains unchanged.
Okay, so that signals confidence in their planned investments throughout 2025.
That's how it reads.
All right, let's pivot then from the numbers to the engine driving them, the commercial execution and the pipeline progress. They talked quite a bit about their successful launch cadence.
Yeah, it's been remarkable consistency, really. They've launched this first-in-class medicine across multiple markets, 3 different indications now, 3 product presentations in over 30 countries in less than 4 years. I mean, that kind of relentless execution has delivered 13 consecutive quarters of growth for the company.
That's an impressive track record.
Yes.
How is VivGuard specifically performing in its approved indication?
That's true.
GMG, CIDP.
Yeah, VivGuard continues its expansion, particularly strong in generalized myasthenia gravis, GMG, and chronic inflammatory demyelinating polyneuropathy, or CIDP, and also in immune thrombocytopenia, ITP, in Japan.
And the subcutaneous version.
VivGuard HiRulo, the sub-Q formulation, is clearly a key growth driver for them now.
Okay, let's zoom in on GMG first. How's that looking?
So in GMG, VivGuard continues to show the fastest market share growth among all the branded biologics. It's firmly established itself as the #1 therapy in that space now.
#1, okay.
Yeah, and management highlighted that the underlying fundamentals are still very strong. Things like new patient starts, the rate at which new prescribers are coming online, the conversion rates, all positive trends.
Still early days there.
They believe they're still in the sort of early to mid stages of the launch curve, and notably, around 60% of new patients are still coming from just oral therapies.
Interesting. So moving into earlier lines of treatment.
Exactly. It indicates they're successfully doing that. And importantly, discontinuation rates are consistent and strong, meaning patients are staying on the therapy once they start.
Good to hear. What about CIDP, where VivGuard HiRulo got approved more recently?
The CIDP launch is showing really strong momentum. They reported consistent quarter-over-quarter growth in both new patient starts and the number of new prescribers writing it.
So the early trends look good.
Yeah, the early trends there are reinforcing their confidence in CIDP as a, significant long-term opportunity. They noted that about 85-90% of CIDP patients starting VivGuard are switches from older IVID or SCE therapies.
Which is what they expected.
Exactly what they expected in this segment. Doctors are typically starting patients on a 12-week trial period. And interestingly, the discontinuation rates they're seeing in the real world are currently below what they actually saw in the pivotal ADHERE trial.
Huh. That's a key point. Better than expected discontinuation suggests maybe real-world tolerance and benefit are strong.
That's certainly the implication they highlighted, yeah.
Yeah.
And across both indications, GMG and CIDP, they're seeing good prescriber growth. They added about 250 first-time VivGuard prescribers just this quarter.
Wow.
Bringing the total now to over 3,700 globally.
And they mentioned something about a reciprocal halo effect. What exactly does that mean?
It suggests that when a prescriber gains experience and confidence using VivGuard in one indication, say GMG,
Right.
it makes them more comfortable prescribing it for CIDP and vice versa. It's like a positive feedback loop that reinforces adoption across the board.
Makes sense. How are the international markets doing? You mentioned Japan earlier.
Yeah, the Japan CIDP launch is off to an encouraging start, and the rest of world segment continues its growth trajectory, really driven by securing new pricing and reimbursement agreements across different countries, particularly in Europe and Canada.
Right.
They're also seeing expanded uptake of the subcutaneous formulation in Europe, and that includes the initial use of the new pre-filled syringe, the PFS, in Germany following its approval there.
Okay, and speaking of regulatory,
They also recently got a positive CHMP opinion for VivGuard in CIDP in the EU, so that's another positive regulatory step forward in Europe.
good momentum internationally. Okay, let's talk about that pre-filled syringe, the PFS. That sounds like it could be a pretty big deal.
It really is a major focus, and yeah, they highlighted it repeatedly on the call. The PFS has been approved now for self-injection in both the US and Germany.
Self-injection, okay.
Yeah, and they emphasize getting what they called an optimal label. It allows for a quick, 20-30-second injection.
20 to 30 seconds, that's fast.
Yeah. And with no specific monitoring requirements or extensive training needed for patients or their caregivers, makes it much easier.
Is the PFS mainly aimed at existing patients who just want more convenience than, say, the IV or the vial and syringe sub-Q?
Well, this is actually the crucial insight they shared. They are not positioning the PFS primarily as just a conversion strategy for patients already on other VivGuard forms.
Oh, so what's the strategy then?
Their strategy is to position it as a market expansion opportunity.
Market expansion, interesting.
Yeah, and the early data seems to be supporting this. They're showing that approximately 50%, half of the initial enrollments for the PFS are patients who are entirely new to any VivGuard therapy.
Wow, 50% new to brand.
Yeah.
So it's genuinely bringing in new patients who maybe weren't able or willing to use the prior options.
Exactly. It really seems the ease of self-injection is lowering the barriers to entry for some people, and the patient feedback they shared has been overwhelmingly positive.
Like what?
They're apparently calling it a game changer, saying it enables increased flexibility, independence, better management of their disease, even facilitating things like travel or managing work schedules more easily.
That's powerful feedback. Where do they plan to launch the PFS next?
They see future expansion opportunities coming up in Canada, China, and Japan. So the launch is really just beginning globally.
And other devices, auto-injectors.
They mentioned that too. Auto-injector development is continuing as planned. They're moving towards understanding larger scale production. So other device options are definitely still in the works. Everything's on track there, they said.
Okay. They also launched a patient activation campaign specifically for CIDP. What was that about?
Yes, back in February. The goal is really to empower CIDP patients to proactively discuss VivGuard HiRulo with their neurologists.
Did it work?
Well, they reported seeing a high grant rate on those requests, meaning neurologists are often agreeing to prescribe VivGuard when patients actually ask about it. So it shows good prescriber receptivity driven by that patient interest.
Makes sense. And they presented new data from the ADAPT-NECET study at the ANN medical meeting recently. What did that reinforce about VivGuard?
Yeah, this study really underscored the broader potential and the long-term effectiveness of VivGuard in GMG. A key takeaway was that 56.5% of patients achieved what's called minimum symptom expression, or MSSE,
MSE.
at some point during treatment. And management noted this is a metric neurologists are increasingly viewing as really clinically meaningful and relevant to patient well-being, getting patients to minimal symptoms.
And did it tell us anything about dosing?
It did. The data supports individualized dosing strategies, whether patients are on a fixed schedule or biweekly. It showed they can both provide rapid, meaningful, and sustained improvements for a significant duration, up to 126 weeks in this study.
Long-term data.
Exactly. And they also clarified that the total amount of drug consumed over time is pretty similar, regardless of whether patients are on a cyclical dosing schedule or a continuous one.
And the safety profile. That's always key.
Absolutely.
Yeah.
They heavily emphasized VivGuard's strong and predictable safety profile as a major competitive advantage.
How so?
Well, this includes things like no requirements for special vaccinations, no REMS program, that's the risk evaluation and mitigation strategy.
Right, no REMS.
No black box warning on the label, and no routine monitoring needed for things like liver enzymes or blood counts. With over 8,000 patient years of data accumulated now, they feel they have a really strong track record to back up that safety profile, and that's critical for long-term chronic use drugs.
Definitely. Okay, moving beyond the approved indications then, what's cooking in the pipeline? Sounds like it's pretty busy.
Oh, it's quite busy. They're advancing 10 registrational studies. Those are the trials intended to support regulatory approval.
10 registrational, okay.
And another 10 proof of concept studies, which are earlier stage explorations. They also confirmed they remain on track to progress 4 new INDs, investigational new drug applications, into clinical studies this year.
Any specifics on those new INDs?
Yeah, 2 of them, Argenx 109 and Argenx 213, are now officially in phase 1 trials. So the early pipeline is moving forward.
And are they exploring new therapeutic areas with their core FcRn inhibition platform? beyond neuro.
Yes, they are strategically targeting areas where they see high unmet need and believe FcRn inhibition could be transformative. This includes rheumatology, with studies now underway in myositis and Sjogren's syndrome,
Okay.
and also endocrinology, specifically targeting thyroid eye disease, or TED.
Expanding the footprint. What about their other notable asset, MP-Bubar? That's the C2 inhibitor, right?
Correct. MP-Bubar is a really key part of their strategy beyond just FcRn. It's advanced now into 2 head-to-head registrational studies.
Head-to-head against what?
Directly comparing it against IVIG, the current standard of care in both multifocal motor neuropathy, MMN, and also in CIDP.
Wow, that's bold. Taking on IVIG directly.
It is. It's challenging the established treatment paradigm head-on in those conditions.
Okay, we should probably also talk about what investors are looking forward to. Any significant upcoming data readouts we should know about?
Yeah, they have several key readouts expected. The first of their 10 registrational trial readouts will be the phase 3 study in seronegative GMG.
Seronegative GMG, that could be significant.
It could potentially expand the treatable GMG population quite a bit, if successful.
And what about the proof of concept readouts, those earlier stage ones?
They have 3 important PPOC readouts coming up. One for abaticamat in lupus nephritis, one for EMPA in delayed graft function post-transplant, and one for Argenx 119 in congenital myasthenic syndrome, CMS.
What's the goal with those PC studies? Just see if there's a signal.
Well, the objective is really twofold. First, gain sufficient signal confidence to justify making a further large-scale investment in a phase 3 program. And second, use the data to help inform and shape the design of those potential phase 3 trials, make them smarter.
Got it. Okay, let's dive into some of the investor-specific context now. Circling back to that Medicare Part D reform impact we discussed earlier. From an investor's point of view, how should we really be thinking about that gross-to-net headwind?
Right. So management reiterated that the reform is accelerating the shift of some patients into the Part D channel. And as we covered, that increases the gross net impact, particularly in that catastrophic phase, as seen in Q1. They also expect the new PFS self-injection launch will likely contribute further to this channel shift, simply because Part D is the primary channel for self-administered therapies in the U.S.
So that sounds like, on the surface, a drag on revenue per patient.
It is in the short term on a per-patient basis within that channel. However, the key long-term expectation management laid out is that the revenue impact from that increased gross-to-net per patient, well, they expect it will ultimately be offset by overall patient volume growth.
Okay, volume offsets price pressure.
That's the idea. And they specifically see the PFS as critical here, enabling them to reach new patient populations who maybe were hesitant to use IV administration or even the prior sub-Q formulation that required a caregiver or healthcare professional.
Makes sense. What does the overall U.S. payer mix look like right now? Commercial versus Medicare. How might that evolve?
Currently, it's roughly a 50-50 split between commercial insurance and Medicare patients.
50-50?
Yeah, and they don't actually anticipate that overall percentage split changing dramatically. However, within the Medicare half, the proportion of those patients who fall under Part D will increase over time, particularly in that D for Delta or catastrophic phase where that higher rebate kicks in.
So the mix within Medicare shifts towards D.
Exactly. They said the main difference in net price between Part B and Part D really boils down to that approximate 20% incremental rebate paid in the Part D catastrophic phase. But they also emphasized that IV administration is still expected to remain an important channel in the U.S. for some patients. That's driven by factors like the buy and bill dynamics for physician offices and just individual physician preference sometimes.
Can you quickly explain buy and bill in this context?
Sure. Buy and bill is a common model, especially under Medicare Part B, where a doctor's office or clinic purchases the drug directly, they store it, and then they administer it to the patient in the office. Then they bill the payer like Medicare Part B or commercial insurance for both the drug itself and the administration service.
Okay.
It's a deeply ingrained model for many infused or injected therapies, and some physicians just prefer it logistically. VivGuard's a 5E formulation primarily uses this Part B buy and bill channel in the U.S.
Got it. Thanks. What about potential concerns around most favored nations or MFN clauses globally, where a lower price in one country could trigger price cuts elsewhere?
Yeah, they address that. Management they've maintained a very disciplined global pricing approach from the start. Their strategy has been to keep list prices in key international markets within a relatively narrow band, generally pretty close to the U.S. list price.
Any examples?
They cited Germany as an example of this consistency. They also noted that pricing for the new PFS has already been set in their priority global launch markets, following this principle.
So they feel prepared for MFN.
Well, while acknowledging that MFN concepts are still sort of evolving in the regulatory landscape, they feel their consistent global pricing strategy positions them well. And they stress their overall approach is patient-centric, aiming to offer broad administration options like IV, sub-Q, PFS, rather than trying to, force patients into specific channels purely for economic reasons.
Makes sense. Okay, regarding the CIDP switch dynamic, there were some questions raised about the possibility of disease worsening when patients switch from older therapies like IVG to VivGuard. How do they address that?
Yeah, they address this directly. They acknowledge that disease worsening is a known possibility when switching CIDP patients between different therapies. It's not unique to VivGuard.
Okay.
This has actually been observed in historical studies, just switching patients between IVG and SCI, and it was even a factor they had to manage within the design of their own AD-HERE trial for VivGuard.
So how common is it in the real world with VivGuard?
Based on their real-world experience so far, they're seeing this phenomenon occur in a relatively small number of patients. They described it as low single-digit reporting of worsening upon switch.
Low single digits. That's reassuring.
It seems so, and early clinical experience suggests that switching patients about 1 week after their last IVG dose appears pretty promising for managing this risk smoothly.
Are they studying this formally?
Yes, they have an ongoing Phase 4 switch study specifically designed to provide more practical, real-world guidance for physicians on exactly the best way to manage these transitions to minimize any potential issues.
Good.
Okay.
Okay, how do they see MP-Bubart, their C2 inhibitor, fitting into the CIDP treatment landscape relative to VivGuard? Could they end up competing directly?
That's an interesting question. Management views CIDP as a very heterogeneous disease, meaning it likely has different underlying drivers in different patients.
Right.
The AD-HERE trial data for VivGuard, the FcRn inhibitor, suggested that pathogenic IGs drive the disease in about 70-75% of CIDP patients. So those patients are likely good candidates for VivGuard.
Okay.
They suspect that complement, which is what MP-Bubart targets, may play a role for other CIDP patients, perhaps those whose disease is driven by different antibodies, like IgM antibodies.
So different mechanisms for different patients.
Potentially. And they designed the MP-Bubart trial to test it in the broader CIDP population, aiming for full success, not just, say, in patients who are refractory to other therapies.
So they see room for both.
They basically see the CIDP market as large enough to potentially accommodate multiple innovative molecules that address different underlying disease mechanisms or maybe cater to different patient profiles and needs. They don't necessarily see it as a zero-sum game between VivGuard and MP-Bubart in CIDP. Both could potentially serve different segments within the disease.
Interesting positioning. Finally, they touched on the seronegative GMG and ocular MG opportunities. What's the potential there?
Yeah, these represent significant potential expansion areas for VivGuard. Seronegative GMG patients, those who lack the common AChR antibodies, they make up about 15% of the total GMG population.
15%. Still a decent chunk.
It is. And data from Japan, where VivGuard is already approved for seronegative patients, suggests that VivGuard offers a similar benefit-risk profile as seen in the AChR antibody-positive patients.
And the trial.
They've worked closely with the FDA to align on the Phase 3 endpoint design for the ongoing seronegative study, and they feel confident heading towards that readout.
And ocular MG.
Ocular MG, which affects only the eye muscles, is another area they highlighted with high unmet need and a pretty limited treatment toolbox currently. Often relying on older drugs like Mestinon and sometimes high-dose steroids.
Yeah.
They see VivGuard's profile, particularly its safety and targeted mechanism, as having the potential to really disrupt this treatment paradigm and offer a potentially better tolerated, more effective option.
Lots of potential growth avenues.
Okay.
Okay, let's transition. This is not financial advice.
Absolutely. Crucial point.
Hey.
Any discussion about potential investment outcomes or ideas based on this information is purely for illustrative and educational purposes. It should definitely not be taken as financial advice.
Right.
Investing in equities, especially biotech, is inherently risky. You absolutely should do your own research and always consult with a qualified financial advisor before making any investment decision.
Okay, disclaimer firmly noted. But let's have a little fun for a moment with a speculative exercise, framed as, an outrageous but plausible trade idea, just to explore the potential upside based on what we heard in this call.
Okay, I'm intrigued. Lay it on me.
Well, given those consistently strong underlying patient metrics, they highlighted the new starts, the growing prescriber base, those high conversion rates we're seeing across both GMG and CIDP.
Coupled with that overwhelmingly positive, almost game-changer level feedback from patients about the new pre-filled syringe.
Exactly.
And critically, that early uptake data showing 50% of the PFS enrollments are completely new to VivGuard patients.
Right. And you factor in their robust balance sheet, which gives them the financial muscle to keep investing heavily in commercialization and the pipeline.
Okay, where are you going with this?
The idea is to consider a significantly levered long position. It's essentially a bet that patient additions are going to accelerate materially faster than what current market consensus models might be projecting right now.
Okay, levered long.
Oh.
How outrageous are we talking?
Well, the outrageous part is the core assumption that the sheer volume increase driven by the super convenient PFS and those targeted patient activation campaigns, especially in CIDP, that this volume surge could actually outweigh the potential near-term negative impact on net price per patient that results from that accelerating Part D channel shift we discussed.
So betting volume trumps the gross to net pressure in the near to medium term.
Exactly. It's a fundamental bet that their execution and the sheer patient pull for these easier options are such powerful forces that they might overwhelm the kind of detailed model mechanics that analysts might be overly focused on right now.
Leading to revenue growth that potentially surprises the street to the upside.
Precisely. And maybe the best way to capture that thesis, that potential upside surprise well beyond the immediate quarterly fluctuations, might be using something like long-dated, maybe out-of-the-money call options expiring in, say, 2026 or even 2027.
Interesting. Positioning for that potential inflection point down the road. Again, purely a thought exercise, not advice.
Absolutely not advice, just exploring the narrative. It's a high conviction perspective betting on the commercial strategy, really unlocking a larger addressable market faster than perhaps anticipated.
A plausible narrative based on the call, definitely.
So to bring it all together then, the key takeaways from Argenx's first quarter 2025 call seem to be, first, they delivered solid financial performance with really striking year-over-year growth.
Yeah, financials looked strong. Second, they demonstrated continued strong commercial execution, with that particularly promising early uptake data for the pre-filled syringe suggesting it really is expanding the market, not just converting users.
Third, they're seeing continued market expansion in both GMG and CIDP, which seems supported by healthy underlying patient and prescriber trends. Keep an eye on those metrics.
And fourth, they maintain a deep and very active pipeline with multiple potential future growth catalysts on the horizon, including several significant upcoming data readouts across different indications and mechanisms.
Okay, so once again, just to be crystal clear, this summary is for informational purposes only and is absolutely not financial advice. Investing in equities carries significant risk.
Definitely. But maybe here's a provocative thought to leave you, the listener, with. This accelerating shift towards easier self-administered options like the pre-filled syringe, which is partly driven by things like regulatory changes like the Medicare Part D redesign. It isn't just about convenience, is it?
What do you mean?
Well, it seems to highlight a really powerful underlying trend of patients demanding more control, more flexibility, more independence in managing even complex chronic diseases.
That's a great point. So the provocative thought is, how might this fundamental shift in patient preference continue to reshape not only how existing therapies are delivered and reimbursed, but maybe even influence early drug development strategies across the entire biopharma landscape in the coming years?
Exactly. It feels like a patient-centric force that's really only getting stronger, something to definitely keep watching.